Elliott waves. Elliott waves is complicated. That is the best word. Elliott wave. You know, in hindsight, it's fairly simple. But when you hear what's going to come now, so you can do these things, you can see this here. There's rules to it, really. It says you have your pullback, and well, this is an overshoot. So that makes this the real top, the orthodox top, and this is your fake out. That's your B wave. And that makes this like a C wave you would be expecting. But if you read the elementary parts of the book, you know, a C wave is 5 waves, and you don't have that here. And that is why most people choke on EW and it's technically really, if you want to start counting this and you look at that book, it's 1, 2, 3, 4, 5, A, B, C, repeat. That is what, you know, an impulsive wave structure really is. So that's what you would be that's what you would be looking for here in this, you know, and then it sort of like works. This is your impulse wave, A, B, C, 1, 2, 3, 4, 5, and then you get A, B, C, and then 1, 2, 3, 4, 5, A, B, C, 1, and then it dies here. Then it starts correcting, and that's where everybody gets into trouble. And the problem is that these ABCs, which if you recognize is my key fractal, you know, this is also an ABC. First was a zigzag, there's an expanded flat, and then you have the ordinary flat. These are the only 3, you know, technical ways market corrects. But then you can have truncation, and then you start wedging. That's still an ABC potentially, but this can also be 1, 2, setting up the next leg higher. It is possible to combine it in any way, and that is what you see here. A, B, C. C truncates, so it doesn't give you that traditional lower low. And at the moment when you're looking into that, you know, what are you going to do? And that is the problem with Elliott wave. This is an A, B, and you're looking for a C. So you cannot buy this because you have to wait for that to complete. And then you can get long in wave 4 of lesser degree of the previous move up. So that would be the demand section, and that is how the book describes it. Because this would be your 4-wave principle here is like 1, 2, 3, 4, 5. And this is sort of compliant because wave 4 did not touch the top of wave 1, so that is expansion confirmed. And wave 3 is the largest. It's if you look at the book, this is compliant with Elliott wave theory. And then your correction starts. So now you have your impulse wave, and then you need your ABC, and you get that. So you stop out, and then ABC. This is what you need to get. But if you don't get that, it's also possible that you get your wave 4. You know, then you start wedging. So then you go 1, 2, 3, 4, 5, and then higher. So that is where your wedge comes in. And that is, how I drew the gold correction. That would be something like that. And that is looking like it's setting up here. So you're looking at that and you're like, okay. But then the next candle comes, and we already know from before, is it just gaps up and escapes. And that is, the problem with EW really. And you see, this is the top, and now we're going to get an ABC. You never know what you're going to get. Elliott writes specifically that price can move in any direction, at any point, from any point, and at any time. And we see that here. So that is a good example of Elliott wave in this case, because now when this goes higher, if this indeed pushes, how do we have to frame this? Is this just an ABC in here? And is this 1, 2, 3, 4, 5? Right? And then how were you supposed to know that that was going to come? Did you only get this tiny little correction here? How are you supposed to know this using Elliott waves? You don't. And that is why I said that Elliott wave is good to confirm. You say, okay, I have 1, 2, 3 higher highs. And this is the fourth higher high. And that could be the trap. Fourth higher high is nearly always a trap. Not always, but nearly always. And that is how the system frames these concepts. Because what we do is we look for the fake breakout. We look for trend. We have our turn principles. We say we're not ready to short here because we're still in an expanded bullish cloud and we can't get below the 21. We say if we can get below the 21, we can short. And we have our control diagonal here. It didn't trigger. So the system protects us, not short yet. The system says control diagonal long above. And it is about to let us in. This is that back test, right? It's not a textbook example, but the concept is there. It's a back test of the 9. And that is also how we frame price action. We say we have back tested, bounced, and we're in the 21. If we reclaim EMA 9, we're going to go higher. That is how we frame it. So if it lets you in, then you can get that push higher. On futures, it's beautiful because on futures, this gap is not a gap. In futures, this is a price action in here, and we can trade that. But this was a nice clean chart to show it. And that is really what we do. Here's another one. This is like an uptrend is completing. You have your 5 waves, and you see that confirms because the EMA 9 is lost. That's the same here. You have an uptrend here, and then the EMA 9 is lost, and then you have to start make a correction, and it does that, and then it reclaims the 9, and it just continues higher. Then you have all these EW avatars that are trying to chart all these things, and it's just it's fun, but it's not something that you have to do. You can just use the system because the system says there's your entry. Because really, what is our system? Our system says we have uptrend. Buy. High or low RT, buy. And as you can see, it doesn't really matter where you put them, but you have these pivots here and there. I could go into that and really dissect it and say, okay, this is you wave this and you wave that. But I've learned that the trend helps you identify what is what. We have an impulse if it finds there's no arguing that this is an impulse here. And a pullback and another impulse here, and then pullback, a consolidation sideways. in terms of the way it forms, it confirms the possibility that this is an impulse wave off the low. And that is, but the system captures this because it's an EMA9 pullback. This is your EMA9 breakout. You have your higher low and you have your breakout. That is what that does. And the same from here, that is your area to break. We get acceptance above it. We have our EMA9 contraction. We have a higher low here. And this is your daily EMA9 breakout. This is seller's attempt. Seller's failed. Buyers take control. This is your control diagonal. And then this is your entry. And then you go. And then you don't have to count this frantically to be, because it really doesn't matter. And the difficulty with Elliott wave is, we now isolated it like that, but that's easy because we have the benefit of hindsight. If you don't have hindsight and you're just looking at this, then you can tell me what this is. Now, the Elliott wave community, which is, led by, okay, let's not name any names, but there are a lot of clowns out there. I have seen this. Which is literally the dumbest thing you can do. Because the book says wave 4 cannot venture into the territory of wave 1. So this is not a wave 4. This is dumb, period. There are many ways to frame this, but it still is, it's 1, 2, 3 lower lows, and you have a downtrend. There is no impulsive downtrend structure. There's no EMA9 downtrend. There's no EMA50 downtrend. It's a falling base because price is crossing through the EMAs, disrespecting it, and EMA9 reversals is what pays. And that is how you trade a bear market. Bear market, falling base. So the base displaces lower. You have your first base here. This is your failed breakout. This is your failed continuation. And this is your range RT. So this is your original base. And that base displaces lower. And you get base number 2 just below it. Here you have your EMA9 reversal. So this is your reversal climb. This is the 50 rejection. Let's see. This is your 50 rejection. This is your 50 reversal attempt, and it fails there. That means this rejection fails. And this is where, yeah, exactly. Okay, so this is your 9 bounce. Don't make too much out of this. This is just 2 rejection points. But then this becomes base number 2. That is your last significant low, and this is your last significant high. It undercut here, and undercut it failed continuation. This is the pivot that holds. That's also the pivot that we use to draw our levels. And it's the same here. You get your continuation attempt, failed breakout here. That's a B wave, and then you go down. Or a B wave, or no, it has to be a B wave, yeah, because it overshot. If it's a wave 2, it can never make a new high. And that is the same here. This cannot be wave 1 because of the undercut. So this has to be an ABC, and that is how that fits. So and that makes sense because this is a double base. This is a base that is displacing lower, and we can recognize that and frame that as a downtrend channel. We can call it a flag. There's essentially no difference between the two. But the only way to frame this is simply this is an ABC, And let's get all this labeling out of the way. And you have another ABC there. This is an ABC too. They have a zigzag and an expanded. And then in between here, you can look what you have and you say, okay, this is an ABC. It's quite clear. So you have your ABC there. That's actually so simple. And you have another one here because this is an impulse wave down. And then you have a tiny ABC here. And you get 1, 2, 3, 4, 5. So that's another ABC. And I'm like, okay. So where does the 1, 2, 3, 4, 5 come from? No, you cannot get 1, 2, 3, 4, 5. You have ABC, ABC. So that means that price is either making a reversal there or it's making a double 3. If it's making a double 3, the base would continue to fall. This like this one, and then you get this one. And if price is making a double 3, you'll get something like this. That would be compliant. But because of the structure and the understanding of Elliott wave, we know that this one is the one to buy. If it fails, this one is definitely the one to buy. So the first one can fail, but the second one is going to go. That is how you can use Elliott wave. Simply because you understand what is going on in here. And anyone that counts this as a 5-wave down does not understand the principles of trend, because price is backtesting an earlier breakout. And I'm not even looking at the bear market. I'm looking at the 2023 pullback into it. The bear market is the same, but that's why I got confused, because that's exactly the same structure. You have your ABC, ABC, A, and 1, 2, 3, 4, 5. So that's your first ABC there. Then you have ABC here, and then your bottom. Failed breakout, failed breakdown, and your big bottom reversal. So if you zoom out to weekly, you get the exact same structure as what we're looking at here. But the principle then remains the same. And that is where I get these concepts from, where I say to you guys, we have 5 pivots, we have 7 pivots, and we need to be looking to get long, because that's what you have here, the same. You see the structure, and it's an ABC. It is 1, 2, 3, 4, 5 pivots. 5 pivots means potentially complete correction. 5 pivots means potentially correct impulse structure, because there is no difference between the corrections and the impulse structures. The only thing that happens in an impulse structure is that this in-between part extends. So then you get displacement, and then it moves the entire. And then you have an impulse wave. There is absolutely no difference between the two, except the fact that it doesn't ignite. When it doesn't ignite, it becomes corrective. And that's why I have designed my fractals instruction, because it takes you away from the necessity to find patterns. I'm saying the only thing that the market does is it makes this pattern bullish and bearish. And then variations of these two patterns make the entire market. Market doesn't do anything else except these two patterns. And then they can truncate and expand. They can accelerate and expand. They can accelerate and truncate. You can make any and every single market structure from this single fractal. And if you get 2, then the guideline of wave formation says that you cannot have two of the same, and it's funny that that is usually correct. So when the first one is a zigzag, the second one is usually, sharp or, whatever, but you get two different fractals and they make that impulse structure. And it's simply because one of these waves extends. And that principle is repeating itself everywhere. That is the core of the dynamic trend following system. And that is, we were talking about Elliott wave. So and then we get to this. It's like we have 5 pivots here, and then we know that this might be completing. So I'm saying we don't need all the Elliott waves to understand that we have 5 pivots, and that's why I basically gave up on Elliott wave and just work with trend instead. Because when you zoom out and you see that we are at key support here, and you think we have 5 pivots, okay, the book says we should be looking for a long. Now we can get this one. We can either, reverse directly from here, which of course we already know that we did, or we can get added complexity. And that's the part where it becomes funny, because when you start measuring and you use ratio analysis and you can this, I guarantee you that this is 146% undercut. Let's see if my big mouth is onto something. Well, it overshot a little bit, but close enough. And then you could say that when this goes to the other side, we should get above 146 to the other side to see if we will not get an ABC. If you're practicing Elliott waves, it's very important to understand that this is, when this overshot here, that this automatically cannot be an impulse wave. And that is how the market plays with us time and time again. Some say they do it on purpose. And I don't really believe that. I think that this is just a bag of psychology that is being mapped here, because people thought they were going to go higher and they get trapped. And just that fact that some stopped out here, but we're not in an impulsive structure. That's why nobody is entering this trade either. In Elliott waves, it's fairly clear that this cannot be wave 1, 2, simply because this made a higher high. So that means that whatever is happening there, this is your real top, this is your A, B, and then you get an extended C wave here. And this is where I would always get into arguments with people that say that things are not compliant. They say that this is not possible. And I would do this time and time again, guys. I would draw my ABCs like this. And I say, you don't make the rules. Market does what it wants. Because how otherwise you're going to fit this? You're not going to fit this. This is an A, a B, and then what? This is a C, and then you have no lower high here to confirm that, another, what is this then? Is this A, B, C? How are you going to count this? I always asked these guys, and nobody was able to communicate with me and say how it was. Obviously you have to zoom in to dissect this, because this is probably your ABC right there. That would be your ABC. And then at lesser degree, you get a bounce here, and then perhaps, another ABC, because this would be an impulse wave down and a corrective bounce and another impulse wave. But there's no 5-wave structure here. It doesn't matter how you dissect this. You have 1, 2, 3, 1, 2, 3. It's a complex stacking of that same fractal that I'm talking about. This is A, B, C. And then somehow there that extended, and then you got that other A, B, C. And that is what I teach with my fractal concept. This is how they combine, and this is how these two fractals make price action. And every time one is complete, it sets up the opportunity to trade our diagonal entry models. And when we know that this is not 1, 2, 3, 4, 5 down, we know that this cannot be A, B, C. We know that this is still a corrective structure here, and nothing has ended here. Definitely, if this is 1, 2, 3, 4, 5, something ended here. But it's corrective, and we need to wait. And then you can get, that is finally what the point what I want to make is, like, from out of here you can get your impulse wave. And I think that that is also what we got. I don't know how big that was, but like something like that, or maybe, more compliant. It has to be aggressive, because when this undercuts, people start covering and entering the trade here. So that would be an impulse. And then people say that this is wave one. And then that is my point. When you have an ABC and an ABC, then you can still get A, B, C. And that is why we still need something to prove to us, what it's going to do. Because if this is an ABC, it doesn't have to make a new high. But if that undercuts, then you suddenly have a 7 pivot structure, because then you have your double three. 1, 2, 3. B wave, 1, 2, 3. That makes a WXY. And then you have 1, 2, 3, 4, 5, 6, 7 pivots. So 5 pivots and 7 pivots are significant lows. And then the 7 pivot can still make an undercut for an orthodox top. But after you get 5 or 7 pivots, you should be looking for a reversal setup. So that's what we're doing here. That is what we did here. We got long there. And then you just wait to see what market gives you. But it moves to that area. And it continues to go here. And this ratio analysis is something that we can use to help us estimate. But it's not a rule that is set in stone. And it is not possible to say that because we passed the 1618 that this is wave one. It's still possible that this is a C wave. It doesn't matter. I've seen C waves that made 4.618 in parabolas, and C waves are third waves in all their might. And that is why I always say to everyone that studies Elliott wave, if you have an impulsive wave one, you have to be super careful, because an impulsive wave one is nearly always an ABC, a C wave. Because that would make the wave one the third wave. So I'm really careful with this type of structure. Of course, we were in here and we are benefiting. And then we get back to the system, because now we are wondering, is this wave one or is this wave C? And that is why Elliott wave is, it's useless in terms of prediction. Because if you say this is wave one, good luck to you. And then you have to wait what market gives you. And of course, Elliott wave is 1, 2. This is technical, the book. Everybody knows how to do this. It's, and then you get ABC, and then we go in. But I know from experience that if this is wave one, then you're not going to get a traditional correction that will let you in for wave three, because that rarely happens. When a wave three takes heart, it rarely lets you in, unless you have a system that tells you how to get informed, because you don't get anything. Look at this, right? So good luck with your Elliott wave. 1, 2, 3, 4, 5, ABC. I was like, you were waiting for your ABC and it didn't give you anything, right? So, yeah, beautiful.